Hello guys, how are you? How's everyone tonight? Viral kicking some butt with FDX today.
No, I closed the FDX today. Earning is tomorrow, so I don't want to take a risk anymore.
You took them?
I closed the FDX today around in the afternoon.
Nice. Yeah, I grabbed mine too. I think I left one only.
Yeah, it's earning. I don't want to take a risk in the beginning of the week.
Yeah, it was a nice move today.
Yep. Even the Nike too. That was
Yes,
keep going.
I'm still holding Nike.
Nice. Okay. All right.
Yeah, I got Nike. I sold FTX. I got in on a couple of other on. Today I traded SPX, Apple on the way
I
up.
added the CVS. I think we talked about it last week, and it's paying well.
It's been, let me check 1 second. CVX, let me just, you know which one was today? I wanted to call Apple and I doubted. I doubted when it went up in the first candle on the break. I said that I got in and I was writing to call it, and I'm like, let me see if it's gonna hold or not. And then all of a sudden it jumped and started going, and I'm like, oh. So I didn't want to call it because the price on the 210s was already up. So I didn't want it to call something to chase it. And then the thing went all the way up. But was a nice jump in the morning.
I moved to the slow moving companies, AT&T, CVS, Exxon, Disney, blah, blah, blah. It's paying better right now.
CVS, I mean, it did a little peak there and it's holding that between that 61 and 62, but I was on XOM and I sold it. I swung that from last week. And what else? What else? I got. Oh, you know which one I traded today that it was really good? Goldman Sachs.
Oh, yeah, that was good move. Yep.
Goldman Sachs was great. I was on my JPMs from last week on the 210 and the 200s. I sold them. It went a little down and then it went above 198 again. But I bought a couple of Goldman Sachs and I left them there. And I said, oh, I'm just gonna leave it for the week because I like um I was watching XLF and I'm like, XLF, it's just, you know, going. And I left it and the thing went like, I don't know, like 35%, 40%. I was like, wow, it paid pretty well. So I took it. I know that the Fed's talking tomorrow, so I didn't want it to risk it. But yeah, that's a nice trade. Hello guys. I'm just waiting until 8:05 to have more people. Thank you for coming. Thank you everyone. Hi John. Hi Johnny. How are you? How's everyone doing? How was your day today? Hopefully a little better than Friday, which was a little crazy. Just today the classes, I'm gonna do it a little different. I'd have a little of concepts on my charts, and I'm gonna be jumping from charts to the basics on the presentation. So I didn't want to add charts to the presentation because at times it's not as dynamic as I want it to be. So we're gonna be jumping back and forth from the charts and just explaining the indicators. What I wanted to do is just do a little class on all the indicators, like not all, because there are plenty and we don't have the time, but explain the basics one that we use, and you know, if you have questions, we can talk. Um, just any doubts, and there's no, just to let you know, there's no one indicator that it's best than the other one. It's a matter of personal choice. So it's gonna depend on you guys. Which one do you rather have? Which one do you prefer? Which one it's easier for you? So it's gonna be different in for everyone. So we'll jump into one another, and then we'll see how to use it and how to and what it's trying to tell us and how do we can interpret. So let's start it. Where it's not many of us today, but let's start with it, and they can jump into it. So just a quick introduction what we're going to talk about. This is just I want to talk a little bit about the technical indicators that we use normally on our day trade. How do we use them to analyze our price movements, and how do we try to forecast what the trend is going to be. That's basically why we use indicators. The technical indicators, even though we have them on our brokerages, we don't need to calculate it or anything, but it's math. It's calculations that are derived from historical data. That's why we always call them that they are lagging indicators. They're not real time, and they're not forecasting what the price action is going to do. So we got to be very careful on analyzing those indicators because we have to remember that they're just based in the past prices. They help us to try to make informed decisions and to identify what we need, where the trends are going to be. We use them to generate buy and sell signals based on what happened in the past, and that's going to help us decide if we're going to jump into a trade, or are we going to get out of an investment that we're doing, or a specific trade that we are in. Throughout the presentation, we're going to expose some of these indicators. I'd like to talk a little bit about the Fibonacci retracement. I'd like to talk about the RSI, the EMAs, of course, and the SMAs, and I'm going to talk about the Bollinger Bands too. I want to have the Bollinger Bands because all of these are basic trading indicators that we use on everyday ways, and depending on the time frame and the movements of specific names, we can switch around them. So I thought that it was pretty cool just to talk a little about them, understand them if you don't know how they work. So if you have any questions, please feel free to use the chat to ask, or if you are driving or doing anything else, be careful and just feel free to talk. I like the interaction. If you have your microphone on and are doing anything else, please, out of respect for everyone else, just mute yourself. And but if you want to make a question or anything, just feel free. Let's go to the simple one, guys. Moving averages. We use these every day. We don't even know how they're made. We just chart them and we try to follow them. But basic ones are the EMAs and the SMAs. Exponential moving average versus the simple moving average. Those are just technical analysis, averages to smooth the price action and help us identify trends. The simple calculates the average of a selected range of prices by the number of periods in that range. The exponential gives more weight to the recent prices, making it more responsive to new information compared to SMA. So the crucial difference between the EMA and the SMA is the EMA is going to be a little more aggressive. It's going to move a little more with the price action, closer to the price action. The SMA is going to be a little lagging on the price. So depending, I like to use EMAs when I'm doing shorter price periods, and when I'm in the extended ones, I don't care about using the SMAs. How do we use them normally, and how do we use them? We use them with the crossovers. Normally, when we see a bullish crossover, it's when a shorter term moving average, it's crossing above a longer term. And then when we have a bearish crossover, if the same short-term moving average crosses below a long-term moving average. So that's pretty much, I'm going to be jumping up and down just to show you these examples. And as I said, if you have any questions, please feel free to let me know, or just write on the chat. So here also I if you don't know how to use the all the studies, just let me know. But I loaded and preloaded some studies on my TOS. I have all of this, and some of them are I use the word, is it the 20 and the 50 SMA and the EMAs. So in this this is just a way on how sometimes we can use both of the EMAs and SMAs and look for the crossovers. And why I did not wanted to add it just drawings on the presentation, but I wanted to have more dynamic moves, is because there's a lot that we can see here. Like when we have same EMAs and you can see them here, EMAs and the SMAs, these are the 20s and the 50s. The blue ones are the EMAs and the SMA 20s, and the light yellow and darker yellow, it's the exponential EMA and the simple EMA. So sometimes the only thing that we need to do with them is know if we're respecting above any of the levels and when they cross. So sometimes some traders use only when the 20 EMA crosses above the 20 SMA, like here, or for example, here, you see the blue one crossing on top, telling us that, this is the EMA that is going to be more sensitive to the recent price action. It's crossing above our SMA, and it's indicating that there is some pressure, upward pressure trying to go up, and this is moving up. And then when we see here that we are stalling kind of plateau, we're plateauing here, like we got a huge pump, aggressive pump, and then we're kind of like, the movement is ending the volume. You see how that EMA crosses below the SMA, because the SMA is lagging there. So this is a great way just to know if I wanted to take a trade, this is extended, so you could have jumped here and then try to get out somewhere when you are around here. Another way to see this is if you wanted to see the EMA crossing on top of this is my simple moving average right here, or the first one is going to be my 50 EMA. So if you see my 20 crossing here at opening on top of my 50, it's giving you a signal that, this is a bullish crossover. So our bullish crossover could be your entry level for this trade all the way until if they try to touch it again on that 20. So that's a nice way to see it, because we see how it repeats. You see how it goes from, up, down, crosses. We see this line, the aquamarine one, how it crosses up and down, and you see how it crosses again here. So you can use that as a trading indicator, and that's it, if you want. And you don't need to have so many things on one chart. And sometimes you can use both, the 20 and the 50, SMA and EMAs, and you can see not only when the 20 crosses the 50, but when the EMA crosses above or below the SMA. So I just wanted to explain these different types of uses that you have with the EMAs and SMAs, because it's not only that it's going to guide us on, for example, if I go for me, as I always said on all my classes, these are the daily SMAs, and I use these for the long term. So I have CVX here, Chevron, and I see how the 20 crossed below. This is going to be my 100, and now, that CVX, it's going up right now, and I'm expecting this to cross again, and that's going to give us a bullish crossover signal on a longer term on CVX. So I always have on my left side of my screen longer term. So I normally go for the 1 hour here, and it's a lot clearer. You see, look at the 20 went down, crossed the 50, went down, and in all this move, what we saw was, let me grab more time, that CVX was downward. all the time, all the way here. And now we're seeing that it's holding. And if these moves continue, we're probably going to see this blue line, which is the 20 daily SMA, start going to go up and then crossing again above the 100. And then it's going to eventually cross again above the 50, which is a stronger bullish crossover. So you can use this, but in the shorter time frame, you can use the EMAs and the SMAs. So that's one of the main uses of the EMAs that I wanted to show, and then we can continue on the chart. So that's why I did not want to just to have a drawing or just a picture, but I want to just be able to go to the chart, show it, and if you have any questions, as I said, please feel free to let me know. Let's move to RSI, and this is how it's gonna go. Like we're gonna talk about the EMAs. We have talked a lot, but for example, we have some people like to use the RSI, some people don't. I just wanted to explain what the RSI is, how it works, how do we use it as a reference for normally when we have the key levels on the 70 and the 30 percentage, when it's overbought or under, sold, and how do we use it? So the RSI means to be the relative strength index. The RSI, it's a momentum oscillator that measures the speed and change of the price movements. And I'll show it to you on the chart in a minute, on the same chart. But the RSI, it's important that you understand that it oscillates between 0 and 100. And it's used to identify overbought or oversold conditions in a market. So why do we use the RSI? It's a reference to know if we want to jump into a trade or to an investment, am I doing it at the right time, or am I doing it maybe when we are in a oversold, camp? So we got to be careful with that. But you also have got to be careful, and then, sorry, I'll show it to you on the chart, that even though the RSI goes up and down, it cools down in the newer levels, and then it starts going up or down again. So it's not fixed to a 0 point anywhere. This is how we calculate it, which normally we don't need to do it right now because all our charting programs do it by itself, just if you wanted to know how it's done. And the key levels that we use on the RSI are the 70, that indicates that the market is overbought, and the 30. And I show you what I mean about the 70 and the
Order filled.
and the 40 and the 30. The 4, that's a typo in my side. Sorry about that. So, and I'll continue here so you can see what the overbought condition is. When the RSI is above 70, it suggests that an asset might be overbought, or it's indicating a potential sell signal. Why? Because we call it, sometimes you see us selling that it feels heavy, it's extended. So that's when it's overbought. And then when it's oversold, our RSI is below 30, and it suggests that the asset might be oversold, indicating a potential buy signal. So when it's oversold, sometimes you see that it's a great buy opportunity, and I'll show you right now on the chart what that means. Sometimes we see on the chart of the RSI a divergence, and you see sometimes more technical traders, sorry guys, like Toasty saying, oh, I see a divergence here, or I'm looking to a divergence on certain indicators. When we refer to a divergence, it's when the price of an asset moves in the opposite direction of the indicator we're talking. So it's a potential reversal that is happening on that name, but it's normally done on different indicators. So a trading signal, buy signal, is going to be the RSI moves from below 30 to above 30. And then the sell signal is going to be the RSI. It's from above 70 to below 70 because it's moving into, it's moving down again. And the divergence signal is going to be if the price makes a new low, the price action, but the RSI, it's making a higher low. So it's going on the other way. Same with the verge. And I'll show it to you. right here. And now you see where we have the RSI, it's down here, and I'm gonna expand it so we can see it clearly. This is the volume, and this is the RSI. You see RSI, this is the RSI, and these are our lanes that we have the 70 and the 30. And this is CVX today. So you can see, sorry guys, the reference that we have is normally we have these two yellow lines telling us where our boundaries are. If you see that, you see here, it's with using this indicator is going to tell us that it was oversold and it's a good buy indicator here. So if you see, the same in the chart, we were at, a level at 155.28 where it was a good signal to buy. And then when it was overextended here, then you see how we went above 70, and when what is telling us the definition, bless you, is that if it's above 70, it should be a sell signal, but if it's coming below 70 from plus 70 to minus 70 and entering this area, you should definitely sell if we are trading like that. This is for, for the scalp. You can use it for bigger time frames. So we can use it on the 4 hours. And the 4 hours, you see how we got this great period to buy. But look at this, even though it's telling you that, it's a good period to buy, you got to be careful with your charting, because look, this is downtrend. This is downward trading. And if you wanted to buy here, maybe you had a quick scalp all the way here. But then you need to get out. It's not for a long-term hold, because here we have lower highs. It's higher high, lower high. So even though it's telling you to buy, it's telling you to get in here and sell in here. Look at how it correlates with the 70 right here, see? So, and then down again. So whenever you touch this, and when you see these reference lines, you sell around this area and you buy when it's below this area. And this is just an indicator that you can find on your studies. And when you look at it here, you just type RSI and it's right here. Relative Strength Index. It's really cool. Some people say that it doesn't, there's always going to be people who likes searching indicators and people who doesn't. So I just want to explain them how they work, and you can choose. I mean, I have them as a reference normally here, but I also have, as I showed you in my other screen, I have the MACD or the TTM squeeze. So you're going to be able to, we're going to discuss these two also.
Cool.
Any questions so far? No.
I grew up in New Orleans, and my sisters and I were raised by a single mom. My mom did everything to support us. She took a job as a Catholic.
All right, Lloyd, sorry, I mute you. And let me go back to stop sharing. Share screen. Let's go back here. I hope that this is not inconvenient, guys, for you, but let's see. Can you show an example of what's your favorite setup with indicator setup, getting on a trade with confidence? Yeah, Rudy, I will show it to you. I prefer 80 and 20 for the swing, for the better entry without worrying other indicators. Nice. Thank you, Viral, for sharing. Yes, you can set up this in different ways. Viral is saying that he likes to have it on 80 and 20 for swing trades, so he doesn't worry for other indicators. And I will show it to you, Rudy, what examples I use on my favorite setups. Let me just finish here on the one, and we'll go and talk a little more open on all of them. Now I'm going to jump to the Fibonacci retracement. We use the extension and the retracement, and I really like this because it's interesting, because even though it comes from the formula, the Fibonacci formula, it's just interesting why it works, and it's a matter of more of a psychological level that we have and the like people have, and we use them. So the Fibonacci retracement, it's a technical analysis tool that we use to identify potential levels of support and resistance in trades that we're doing. And it works based on the sequence, on the Fibonacci sequence. And that's a series of numbers that each number sums the one preceding one. So I don't know if you have seen it, but it's like 0, 1, 1. So then 1, 1, it's 2, then 2 and 1, it's 3, then 3 and 2, it's 5, 5 and 3, it's 8, and it goes like that all the time. But the key Fibonacci ratios using retracement levels are derived from this sequence, and there is a different levels that are add or subtracted to their prior or next numbers. How do they use it and why they use it? Someone found that that these numbers match with common levels on trading, which is pretty interesting. So we use them to identify a trend, to determine the high and the low points of a significant price move for an uptrend, then the low point to start to the high point to the end. It's used for a downtrend. Then the high point is the start and the low point is the end use. And I will show this later on. So this is how do we identify the trend. How do we apply the Fibonacci level? Well, we divide the vertical distance between the high and the low points by the key Fibonacci ratios, and it's going to give you these ratios. That's the level of sequences that we see when we chart the Fibonacci's, and then they're plotted as a price chart. Then how do we use them? Well, those are going to be our new support levels if we don't have any, or that's going to be where on a shorter time frame we can use it. I mean, we can use them in shorter or longer, but if we don't have any levels charted, that's how the way are we going to use it. So the support level is going to end an uptrend. The retracements levels can act as a support levels where the price may find temporary halt before continuing upward. So we'll see then that they're going to go, this is a level, this is a level, this is a level. And in here, I have a drawing and I'll show you why, because I want to talk about the golden ratio. Resistance levels in a downtrend. So we use them for the uptrend to see the levels, and then we see the levels on the downtrend that they act as a resistance. So either way, as a support or as a resistance, it's our guide to know where the price action should go if we don't know or we don't have previous prices. We have used it on the past few weeks on NVIDIA. We have used it on SPY. We're breaking new highs on certain names, and that's when they come pretty handy. And it's incredible how they work. Bless you. I was using it on NVIDIA, and I was using it on TSM, and it works incredibly well. Then we have the common ratios. These are the levels that they are the widely known ones. Hey, what's up, Norberto? How are you? Welcome to the chat. So we have the 23, the 38.2, the 50, 61.8, and 100. Why we have these numbers that way? These are part of the Fibonacci sequence, and they are numbers that are divided into percentages. So, but when we add them or subtract them, they are a little bit bigger. So when we do the percentage, that's why we have a point something. So the common ratios, the minor retracement level is the 23.6. The common one, like often used as a more significant level, will be the 38. The 50 is just a ratio widely used as a significant level in the middle, so you know where it is. But then the widely used are the 38.2 and the 61.8. This is considered a very important level normally. Some people, when they trace the Fibonacci's, they take out the 23 and the 100, and they just leave these two. Those are the only ones that they want to know. And the 100 is just to know that you have a full retracement. And here's a chart that I got from internet that I want to share. I like the explanation here. So if we're doing this retracement and we want to know, you know, where we needed to bounce, we can do we swing from the high, we go to this lower level. That's how we plot the Fibonacci retracement, and then we will see where our levels come. And from where our levels are, the 38.2 and the 68.2, 61.8 is going to be what's called the golden level, which is the area between the 50 and the 61.8. This. Normally, this will be our support area and go up, or if we go in, if this is an extension, it's going to be the extension area or the rejection area if we're doing the extension. And then the golden zone represents the important support level in which price stops its retracement to the downside and continues its trend upside. So support or resistance. So that's how do we use them, and that's why we use them. Let's jump back to our charts. And let's see how they work. So we're back on the chart. Here we have our chart right now that I don't have many levels here on the 4 hours. But if I want to do my pips, I have them here. These are my regression channel, or I've been using the extensions a lot. So if I want to see the extension, I will go for a move maybe from, I can do from, let's say from here to here. And you see, this is my extensions. You grab from the lower move to the movement that you're trying to calculate. And then here are, this is the 23, 38.2, and this is the golden level. So this, if you see here, what's interesting here is that this level around this area should match with some levels of resistance somewhere around here. That's a theory. NVIDIA 113, because you only use them to each day after morning. High and low, it says. Where will you place them? Here. Normally you'd place them on the move, on the lower of the move, all the way to the high of where you would like to do it if you're doing an extension. If you're doing a retracement, you can do them like this. You can do it from here to, I'm doing a, where is it? From the high to the low. This will be the level. The red ones are, you go from the highest to the lowest point, or you can go from here to here, and you can try to decide which other levels you would like to grab. So, but these are, you see how we respect this, you see how we are finding rejection here, you see how it's sort of holding here, and then holding this, look at this right now in the aftermarket, how it's holding perfectly on the retracement. And if we are using this retracement, this means that somewhere around here, this one, and this one should be the gold levels, and we should bounce somewhere around here based on the theory. So we went a little lower, we got a full retracement, and then coming back here. That's the way how we should use the Fibonacci retracement. So it's a great tool. You have them all here. You can always, remove the drawings. If it's annoying, you can just use them as a reference and then just remove them. Or sometimes what I do is, if I'm doing a move on a extension, I can do from here. I go from here to here, and then I just put it on a color that is not gonna bother me while I'm here. So I just have them on the background as a reference. So it's very, very nice, very useful. And it could work for, verify the levels that you have with what the fibs are telling us. And if we are breaking highs, that's another way to use them. Oh my God, sorry guys. So let's see. On the next one. So now we're going to jump to the Bollinger Bands. These are pretty cool to use too. I don't hear many people using them all the time, but sorry guys, this is a residual from the flu still. But let's jump into the Bollinger Bands to play around with this a little. So the Bollinger Bands are a type of statistical chart that it's characterized by the prices and volatility over time of a financial instrument. They consist of 3 lines that they are drawn in relation to the price action of that security. The middle band, upper band, and the lower band. Normally, it's a common use to delete the middle band, and then you just have the upper band and the lower band, and you can guide yourself as a rejection point or a support point. And I will show it to you on the chart. How do we use the Bollinger Bands? Well, we use them to identify volatility. Also, we use them in conjunction with other indicators to be sure that, this is a good entry, this is a bad entry. You can use them, added with the RSI, you can use them added with your levels. And normally what it's visually nice about this, it's gonna give you a sort of parenthesis around the price action, so you can guide yourself visually very, very easy. And then we can see how the price, when the price is touching the bands, if the price action is touching the upper band, it's considered to be overbought, same thing as the RSI. And when the price action touches the lower band, it's considered to be oversold. So that's pretty cool to use it. The trading signals that we get to use the Bollinger Band, it's gonna be if the price is touching the upper band, you should get out, or if the price action is touching the lower band, you should it's a good entry level at that time. Or if you are in puts, get out. On the breakouts, we see how the breakout is on the upper band, the potential continuation of the trend. If we break above our margin, or if it's below, we have a potential continuation of the downtrend. And how this looks on the price action. So I'm gonna just change everything, and I'm just gonna use this is how the B band looks, guys. I don't know if all of you have used them before. None of you don't care to use it, but it's really cool. We'll use stock itself or calls.
Girl.
Yes.
Oh, appreciate you, man.
What's up, Amar? How are you? Any questions on the fit?
Man, everybody here got like big dogs and all that. They say they do, but they don't really. Yeah, they don't be tripping. They don't. Yeah, she cool. Her name's Pope.
All right. So there's a scenario where you're willing to use the Fibonacci level. Sorry, I just mute Omar. Sorry, Omar. Is there a scenario where you're willing to use the Fibonacci levels? No, not really. If it's the volatility is too high or it's too risky, but the Fibonacci is what's gonna give me just levels that is gonna guide me. So I use them. But here, and you can mix them. Remember, we're talking about different indicators, but like, for example, I have here Norberto saying about CMG. Let's see how CMG went today. This is CMG today on the 4 hours. You see how it was overextended, overbought, and boom. So the idea is, if you bought here, you sell here. If you're here, you can, buy puts or sell calls or sell puts. And then normally you don't get in if you're in the middle of in between your levels, because it's the same as your level. It's not touching it, so it's risky. But look how it was just touching. The thing that could happen is try to go above, or then it got, it got weak, and then it went all the way back down. So look how this looks on the 5 minute. In the 5 minutes, this is, what is this? This is my BWAP. I'm gonna remove my BWAP. Yeah. So this will be if I only use on CMG, on Chipotle, the Bollinger Bands today. So I knew that it was a sort of a buying signal around this area. Look how it went up, whoop, and then when it touched here or went above, out. You're out around this area trimming, and when you see that we're coming back here, then that's when you get out. So it's really useful. Yeah, remember your cameras, guys. I don't want to see all your cameras or naked people on the cameras. No need. So please, Husky, wear underwear. Thank you. But so this is how we use it, guys. So it's really cool. Let's see how Tesla looks today on here.
Empanada,
What's up?
I have a question. I kind of used some levels. I didn't really use the boiler bands or the EMAs. I kind of just marked my level as the low and the high, and that's like if it breaks like for example, Datadog, uh, it worked perfectly. On Friday, I was seeing that it was catching volume, and it broke day's high. So I'm like, oh, there's an interesting trade, you know?
Yeah, I mean, remember, we try to add like normally we have to use different confirmations of the trade that we want to do. The more confirmations we have, the more secure is the trade that we're going to take. So look, in Datadog, I don't have any levels. Mostly, I don't trade it that often. So I can use this. I knew that today when it touched here, look, up, 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 up. And when it was around this area, I could have just go out here. And it was a great trade. But I don't have levels. But if I use Tesla, for example, that I trade every day, look how it went all the way up. So look at this. It went out. So when it went out of your band and it came in back to the band in this area, this is where you needed to trim, get out, or be careful. And then it went all from here if you want to take puts, because it's changing, it's reversing, but it's where it's reversing. It's also reversing at my level right here, right? So I have this level here and I have this level supporting this area here that I knew that this was my resistance and this was my support. So I could have grabbed this and say, I like it. Well, I have a confirmation with my Bollinger Band. Yeah, it's extended. So this is good. I can buy it. And then, oh, I got my level here. Is my level good? Is it working? And then you can see the price action crossing back to the inside the Bollinger Band. And you will say, yes, this is another confirmation that it's not only we're finding resistance here and look at all these weeks on the 5 minutes, but then the price action is getting inside the Bollinger Band, then we get out of this. And boom, it went all the way down. And once again, touch here, this was another scalp all the way here to this trend line. What is this trend line here that it supported? Well, on a longer time frame, look at this trend line. That how we broke it, did not hold it, and then resistant on that bigger time frame. So Tesla is trending downward. You see, lower high, and lower lows. So you gotta be careful. Like this is a key point on the pre-market or tomorrow. Like if we break this down, we're gonna give this gap because we are in. Look at this gap. We even though we feel structurally here, now we can just perfectly come down here, and then we're gonna start trading on this new area here. But this is how we use the B bands here. You see, it's pretty cool, really nice. I like it. No worries, Husky. Just having fun here.
Oh yeah, I was asking about Chipotle because I think tomorrow starts its 50-to-1 stock split, and then I think a couple like 2 or 3 weeks from now we got Broadcom with a 10-to-1 stock split. So all these companies are just great buys. That's
Yes,
just you know.
yes, I completely agree. The split is not tomorrow, it's the day after. Here it is. It's on the pre-market of Wednesday. It's a pre-market of Wednesday, and yes, I will buy Chipotle every day without any problem. Why? Look at this chart, guys. Look at the 4 hours. Let me look at the daily. Look at this chart. 1,068 to 3,400. Like, and if we go to the weekly and 3 years, Look at this beauty of chart. These guys are amazing.
Yeah, these companies, you know, they make the S&P or the Qs make like they make them look like newbies compared to their gains. You know, like yearly gain, uh, 5-year gains, 10-year gains. It's like
And
yeah,
even look at this.
these are like majority of like just profits, margins growing, companies growing. You know,
Yeah.
bookings holding too. It's just really great companies.
Yeah, this guy, the CEO of this company, it's he's superb. He's been managing the pandemia. He managed every scenario incredibly. And look at this. This is in the weekly. And look at the week. Look how nice it went up, and then it touched here. If you were an investor, and you buy your shares somewhere around here, and your shares were at 16.95 here, and then you got yours at almost twice the price here. To have twice the price and a little more. So beautiful.
Just buying shares, you know, you'll get a good returns. There's this other company called DEC, DECK, Deckers.
Yeah. I know it. Deckers. Big manufacturers of different brands. This is a huge buy too. The problem with this is the price. Price is expensive, so you gotta be careful. But these are old companies with a lot of reputation that are coming up, and they're amazing. They do Dex do a lot of the of brands that we wear and we use them all the time. But yeah, so but look at the Bollinger Bands, how they work. Let's see what we were trading today. AMD that had a big move today. Let's see the 5 minutes, how they look. Look at the 5 minutes on AMD, how beautiful this was in the morning. Nothing here, maybe nothing here, and then this big touch, and then all the way up. And then you can, as I said, you can always back up your decision with, okay, one touch to my level and second touch to my level, touching the B band is up, is trying to go out. And then when you see that it's moving inward, you're out. You're out. And it went down again. So this is a great use. The other one, and then let's go. I'm gonna go to one more, and then we can play around with the questions. And I'm gonna use this one here. So now we know how to use this, and then now we're gonna talk about the MACD. That's the last one that I'm gonna talk today, because we need to separate it on time, because if not, you're gonna get bored of all of this. But what I want you to do, you guys, is to show you and to give you tools on which ones you can use and how you can use them. Hey, Rafael, you will use that to hold longer than your price target, like a runner. I will use it to know when to be careful to get out of my position, Rafael. Who is with a noise there? I don't know who's with the noise. Open mic, guys. Remember your microphones. All right. So, Rafael, I will use it. Maybe not for to use it. I rely more on my levels, but I rely on when to get out of my position on the B bands. That's a great tool. I rely more on the B bands than in the RSI. So that's how to use them. So let's go to the MACD now. What is a MACD? And this is just another one, and we will do the TTM squeeze later on. But this is a trend following momentum indicator that shows the relationship between the two moving averages of a security price. It helps traders to identify changes in the strength, direction, momentum, and the duration of the trend. All of these guys are indicators that they're basically doing the same. They're gonna try to help us indicate we should get in, we should get out, where the trend is going. And then you can add them depending on what you want to do. You want to add them with, your levels. You want to add them with the RSI. You want to add them with the SMA or the EMA, or you just want to have one level. I got, traders that they use one EMA. That's the only thing that they use. One level. That's it. So the components of the MACD is they have the MACD line, which is our main reference, and I will show it to you, which is a line that it's between the 12-day and the 26-day exponential EMA, and then the signal line, which is the 9 EMA, which is the MAC line. And then the histogram is the difference between the MAC line and the signal line. And I'll show to you what that means in a second. And this is what that means. So here we are. And what do we do with this? Well, we take the RSI out. I'm going to take the Bollinger Band out, and you can just grab the MACD, select it, and apply it. And it's got 30 minutes. And this is on AMD, for example. This is my chart today of AMD. And volume, and this here, guys, is the MACD on the 30 minutes. So you got, this is a histogram that it's showing the difference between the MACD line and the signal line, and the blue line is going to be your line that is going to indicate you. See, when we see a cross here, blue line crossing on top, look at the chart on top, how it looks here, and look at here in this section. Let me just, no, you see when we cross here, it's going up here, and then it kind of went back to here, and then we see a little cross here, and that's a huge up momentum that we had there. And if we want to see it today, for example, look at today, we cross here, and we will go up, and this is this push up here, and then when it crosses back down, that's when, you know, you should be out of it. So it's an indicator, it's a reference, remember. Here, this one, it's pretty nice. When it broke here, it's when all these huge moves start doing. We got separation here of the MACD line all the way down here. See how it correlates to, you know, all this space between them. And then back down, here's where you, of course, needed to get out a lot sooner. So that's when you see your levels. And when you see these things starting to move to this area, you need to get out. So you cannot rely on just the cross to get out. You need to be faster than that. So that's why you need to visualize more. Or, for example, I don't like this crosses as much as I like the B one, but because if I add to this
Yo, Empanada, would you compare the MACD to the TTM squeeze indicator? Because they kind of do something similar to it.
They are, yes. Well, all of these are indicators that they do something similar. It's just visually, some people like it better, you know, in a different way. But you see, here, when we needed to get in, I like this indication better. Like this is, if we use the 3 lines on the Bollinger Band, this will be my 20, which is in the middle. We hold it here in the middle. And from there, we overextended, went out. And when we got back in, it matches with my level 2, you know, sell. But here, it's lagging too much. So it looks nice, but I don't like it. I don't like to use the MACD at all. I rather you see how it's more accurate, a lot more accurate using the B bands. So
I was just trying to stick to names, kind of like, for example, NVIDIA today or the past week, you've been seeing some sellers, heavy sellers, and the TTM squeeze has just been going red bars, like massive bars, and you see those sellers are there. And compared today, obviously the stock market was kind of choppy, and then it kind of let loose to the downside. But like today, the firm holdings was strong. It was strong today. All the buyers were there.
Yeah. But look, this is but this is NVIDIA. Look, on the 30 minutes, we picked and then downward trend. So we touched here. We never went to the higher line or the higher Bollinger Band. Look, we're just surfing the lower band all the time. So no reaction on the upper side at all.
I think the Nvidia is gonna bottom at 112, 110, and then that's when people are gonna plug more money into it. But I think they're just taking huge position players are taking huge profits off because who would have thought it would have lost $300 billion, you know?
Well, look, this could be making a huge sort of head and shoulder. Can do something like this. And that's you see, I think this level around this area or this area here, it's pretty key. But remember that we're not trying to catch out the price action right now. It's how do we use our indicators, compare with it. And the MACD, what's trying to do is, if we see the line on the MACD, let me just grab again 5 minutes for have a better understanding. Oops, sorry.
Like,
So
for
if we
example,
see-
if you would have bought a sorry, Empanada, you would have bought a long dated, let's say 3 weeks out option call on Friday, because you think that was the bottom, you would have got smoked. Your contract would have went to zero today.
Yeah, but that has nothing to do with how do we using our indicators. Because this indicator is not telling you that you needed to buy, longer term calls on Nvidia on Friday. Because in this indicator is telling you that we're on a downward trend and that we're coming down. So if you bought calls on Friday, depends on what you were looking at, but there's no really a sign of that we're holding there. See how this is coming down, 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 down. And what I wanted to expose is every cross on the blue line on top of the yellow line, it's a bullish crossover. And when the blue line cross below the yellow line, it's a bearish crossover. That's what we're using the MACD for. And then the divergence is going to be the same. If we see the divergence is going to be, if we have a new low, but the MACD forms a higher low, it's coming higher. Or if we have a bearish divergence, if we have a lower high, but the MACD is forming the price action is going higher. So this is going to be a divergence because we think that, even though the price is coming down, price is here and the indicator here is coming up. So, but this is coming down definitely. So this might be a signal that we can be holding around this level tomorrow, but it's going to depend on different factors. The idea is how do we use indicators for our, help us to decide what we're going to do. But what happened on Friday with Nvidia, look, there's no signal here that, we're going to hold. We just said we're going up, nope. And then we're coming down and neutral. And look at like pre-market, it's been crucial on the price action on what's happening on before the day. And this weakness here just kind of presented to the break. We needed to hold. This is a break, retest of this level and new level down. So we're stepping down. Nvidia, look at this. If you see Nvidia and we use this is a block that we went down. No. Damn it, I hate when it does that. Come on, down here. There we go. Here, look at these levels. If we come here and I do this is one level here, one level here. Really? Can't do it today, guys. Just too sensitive. Here, this is my other level here. Look at this other level here. And then other level here. And it seems that tomorrow, this is going to be around this area. So you see, 1, 2, 3, 4, 5. We were here before that. Yeah, okay. I'm not going to do it anymore. But yeah, you see how it looks. So we got to be careful with the price action and how do we decide to use depending on the indicators. As I say, it's a personal preference, guys. I like the B-bands. I don't have them fixed on my chart. I sometimes just see how they look. I like them or not. And then what I have is on a different chart, because I have 2 screens, I can have one that it's fixed and I change the names on that one. And so I can, guide myself on the 5 minutes and see like, yeah, I like it. It's good. Let me try. Like if I were here today, I would have tried calls holding here and holding here. And if we break above this, I will set up my stop loss here and take, whenever we touch here, I will trim. And if I see distance separating here, I'm out. So that's a way to do it. And let me see, I have some questions. But the sky is blue. And Roberto, next irrelevant question statement. Yeah, well, everyone's free to ask whatever they like, guys. I know Roberto likes to share his ideas, and appreciate Roberto. But the idea is how do we use the indicators to identify what we're gonna do? So let me go back to, I think I have a couple of more slides. So this is what I was talking about. How do we use the bullish crossover, the bearish crossover, and the divergence on the MACD? And one thing that I wanted to go, guys, just for general purposes, I don't have maybe anyone curious enough, but in the Fibonacci's, I got this extra and why these levels are the ones that we have. So on the Fibonacci's, the 23.6 is this, and this is interesting if you like the Fibonacci sequence. Probably Rafael, you like the Fibonacci a lot, but this is the deriving the number of the Fibonacci sequence, this by the number 3 places to the right. So it's 8, and 8 is 3 places to the 34, it's 3 places to the right. So you divide 34 by 8 and you get this 23.6. Then why do we get the 38.2? We divide it, we get the 38.2. It's a sequence dividing in the number 2 places to the right. So it's 55 divided by 21, because 21, then there's another number, and then 55, and then the 50 is nothing, but the 61.8 is 55 divided by 34, which is dividing the number that the number is immediately following it to the right. So this is interesting. How do you use the Fibonacci extension? You are adding one number to the right or dividing it by 2 numbers to the left, and that's why we get these levels, and that's why we use them. I thought that it was really interesting how on the math side, these levels, which are, so it seems to be random, we actually are very accurate when we use them on our everyday trading. So it was just an extra thing that I like to share with you guys, because I thought it was nerdy to know why these. Sometimes we use some numbers, but we don't know why. It's really cool to get more involved on why do we use the Fibonacci sequence and how it works for trading. But
Empanada.
yes, sir.
I guess one thing that make it easy for me to see the Fibonacci is that those percentages are the percentages of the distance of that extension that we trace, right?
Yes.
So the 100% is like exactly the amount that you trace, and those are like the breakdowns of the percentages in between.
Correct. But the interesting thing is that they're even though those names seems to be, relative to the 50%, and then 38 will be kind of in between that and the 20 and the 0, and then the 50 between the 50 and the 60, you have a level, but they're just made based on the Fibonacci sequence, adding and subtracting some numbers. So it's really interesting how they work, and how when you see them, you use them, the price action really respect them. And I found that to be, in the math side, very fascinating. But yeah, you're completely right, Rafael. And I thought that you would like this.
Oh yeah, you said the nerdy thing. Of course, I would like it, right?
Well, it's numbers. All our indicators and all that we do, guys, even though we look at them like as drawing and lines, it's math. So it's really nice to understand it when we're trading and when we use them. Viral, would you like to check ENPH with RSI? Yes. Let's look at ENPH. Let's see what we got here. I'm gonna get the 15 minutes on ENPH. This is the ENPH, and I'm gonna get rid of the MACD, and let's get the RSI. So look at this. This is in the 50 minutes.
Hey, Pinarda, you're showing PPT, not chart.
Yeah, you're still showing the PowerPoint in Canada.
Oh, sorry. Thank you. I was happy here making my thing, and then here we go. Thank you. So here we are. ENPH. This is our Bollinger Bands. Here's the touches. You see that we are being, it's really tight. That's interesting. It's been really tight. The price action is not very volatile. It's just tight. You see, up and down, not much move. And here it looks like right now oversold, and then it's cooling off. And let's see what's going to happen here. But it's interesting. You see here, when it was touching the lower band, oversold, and then up, overbought, not really coming up. But you see, the move is not hard enough. We're not even touching the middle line. So weak. Here we have a little bit of move, and then weak. This is the only pump that we have from here. And look how it goes. So we're touching the lower band here. We're moving away from the lower band. We're moving away from the 30 on the RSI. So this, you have an entry signal, you have an entry signal, you got here all the way up, then you have an exit signal, and you have another exit signal here. So this is a great example on how do we use this. I understood the FIB retracement. I use it myself, but can explain the extensions a bit more. Cecilio, the extensions are going to be the same than the retracement, but we use them as, for example, let's see here. Let's see. Sorry, I got the. Let's see, what do we got here? Oh, I did it sideways. If we go from, let's say that we got this move that we're trying to see how it's going to go up a little higher. This is what some of the ways how we are being calculated. Depending on a previous move, it calculates another move on the way high from the move that we're happening here if we don't have the previous level. So if you go higher, you can see, and you expand a little more, if you don't have any levels, this could be your next levels that you see how the 61.8 correlates with this. We have a little, and then we have the 100% right here. And that's one of the ways how we use it. And then, because here you cannot do it the same way that you do on the way back, that you go and take the whole move, because it goes from that move higher. So you see, this is another way to use it extensions if you want to see from the 0 point where we are to a specific point. So you go like this, you remove it. We go from here to here. You want to know how much is it, and then you just come back to the point that you are. And here you know that this is your 0. And then you have the 23, the 38, you have your 50, your 61, 78, and 100%. But I use them normally like this, and I try to predict, like, you know, this was the move that I wanted to take from here to here. I see from here, if this is 0, where we're gonna go and extend it up. And we've been using it, for example, when we were here in NVIDIA, when we got these days, for example, here, if we were here, and we had no clue what's next, because there's nothing charted after here, I grabbed this move from here to here and here to here as a reference. So here to here, my prediction was going to be that these are my next levels. Dun, 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 from here. Already, your PTT is showing a chart. Hourly is more interesting. Yeah, we can do it hourly too. And you can see here in the hourly, for example, on NVIDIA, look, it's still flushing a little. Look how we are oversold. So if this, one thing to bear in mind, guys, is that this, if NVIDIA keeps being around this area tomorrow, this is gonna cool down and it's gonna be on a new intermediate. And then from there, it's gonna go up or down again. So this is gonna be around our zero again. And this thing is gonna go up or down. Like, this is not based on a specific fixed level, it's on the price action. So this is gonna move up and down. So don't think because this is gonna keep coming down, this might be just going all the time lower. We can see a little, you know, side action here, and this thing is gonna come again between the 70 and 30, and then it's gonna keep coming down, and then it's gonna go to another level. So it's dynamic. VRT. This is VRT. So VRT was oversold here. So it was an entry here, but not big enough to go all the way up. This one was better, big, and it went all the way up here from one day to another if you wanted to swing. Here, you see that we kind of faded at the middle of the move. So not big enough. And then you see it was a great entry on the Bollinger, but then after crossing the middle line, it's just not strong enough to go and touch all the way. When you have a bigger move and it's strong enough, it will break and they will touch the upper band and try to break it. And then when it's coming down, that's when you get out. So that's VRT. Did I get all the names that you wanted to see, guys? I think so. You have any other questions on how do we use them and see other names that you like to see? So Amazon, Cam, let's see what you got here. Do you play Amazon today? We got Amazon here. Disney. All right. Look at how good this is. Touch the up, and when it's, let's see on the 5 minutes, look how it touched, and then look how it opened it up. So whenever we went out and start coming back, this is an entry for puts. When you're outside of your band and you break in, this is this is a entry, and you can set up your stop loss right on this other wick here, and then all the way down. Look, when it touched, you're out. This is a great way to do it. You're touched, you're out, or you could trim and leave a runner until here. And then calls, you're out here, you're out, and then again, little scalp on calls, and you're out. So it works pretty good. I like it. MU, same thing. Oversold, out. So this was not an entry because you're not on one side. This was an entry, but it was a little fake out, up and down all the way. And this was a better entry. Outside, you got in, you're out here. When you see weakness, it came all the way up. Resistance. Not a huge move to get in, but you could have. And then you see, was the only time that it was oversold was here, micron. But then was it within range? So not a lot of volatility, not a lot of move on MU. SMCI. Today, look, oversold. So nothing really here to an entry. Just a little tiny scalp here, probably not worth it. Never gave a full entry here. Disney. I'd invite you guys to add and play around with these indicators so you can see, you know, how visually are helpful for you or not to see these indicators and the entries, and you can just go look at Disney here, completely out of the range. So you had an entry for puts here, but it went, you see, we got inputs here. It was all the way until the touch here. So this was a great play. And I don't have levels in Disney right now, so I would have used this only and tried to see this. Super nice. And then oversold, touched here. And also remember something, guys. I don't know, I not talk about this, but here we can do these things here. And wait for breakouts. Look, I try to break. No, it's not breaking up. I can still hold my puts all the way down here, and I'm out. If you see breaks up above this, your trend lines here, that's when you let me get out of here. This thing is just gaining momentum and it's going up. But you can draw here. So you can do lanes here, and you can do anything you like here too. So that's really, really useful. Johnny, on the RSI, if it's break the top line, it's oversold, or here it's overbought when it goes up, and oversold when it goes down. Overbought means that the price action is overextended, the price action is too high. Oversold when it's down, it's already too punish, sort of. So this is a buy. This is a buy entry, and this is a exit. Or if your puts, your entry is here and your exit is here. Beyond, long time without, we used to trade beyond a lot. Look at nice entry here. Up, beyond. And then when it start moving from far away back again inside, you're out. Out. Went down, and nothing else. Pretty nice. Let's do CVS, of course. Not much. Look, RSI, not really a huge entry nowhere. A little scalp here if you want it. And then even though this move was bigger, we were never in oversold or overbought terrain. Like never touched anything below before that on top of it. We were always between the 70 and the 30. So very light. Let's see on the 1 hour. And the 1 hour gave us an entry here, but not really important. This entry here was the best one. It went all the way here, and then it kept going all the way outside here. So from here on Friday to a swing today, CVS was very good. SQ, here we are, square, block. They got here was a good buy on Friday all the way until here, and then oversold here, and then we reached these, look at head and shoulders outside the 70, and we came down, so weakness. And but all of this, it's good to see it while we are doing it, guys, when the price action is on, so you can guide yourself, because right now after the fact is easier, and then we have this price action that we don't know what's going to happen on the aftermarket or on the pre-market. But try to do it, live when we are, and set those boundaries, and use the Bollingers and the RSIs to see how you feel. You might not like it, you just, let's see, I just want to change it for my what do I got here? Maybe I'm just gonna use my 13 and 34 EMA, and that's what I like to use, and nothing else. So every time the 13 crosses on top of the 34, I get in, and and then when it crosses on the 34, this is we go down. A little bit of old-fashioned trading with the 13 and the 34. This is Dirty River, Al Brooks, 101 trading. So net Norberto. Here we go. Let's see how the B bands look on there. Here are my B bands. Oh, look at that. Look at how look at this move, how even the middle one went outside this move. Interesting. But on the RSI, we were here was an entry for puts, but not, it was a fake out, touched again. And this was a better entry, but it was not in the oversold. And then look at how this blue line, it's so steep. It had the red one and a yellow one when it's up, and then blue one when it's steep down. So it's fun, guys. Please try to play around. If you have any questions with any of these indicators, let me know. Feel free to DM me. If you have any doubts while you're charting or during the day, you know, you have any questions, let me know. The idea with this, guys, is that you find one combo of indicators and levels that you feel comfortable trading with, and that it's going to help you make your decisions to not only jump into the trade, stay into the trade, and when to get out. So this is why we use them. I like the B bands, the Bollinger Bands. I like them. RSI, I use them, you know, just to know if I get crazy and I say, oh, I want to jump in, and then I see that it's on the top of the 70, I just don't buy it. And then I'm missing, I think, a study here. I don't know where it is. The cloud. And I'm using right now the 8 and the 21, the cloud. This is a single cloud ripster that I got on the internet. So this other study, it also goes one EMA crosses on top of the other one, and then visually gives you this space. The more extended this space is, the more you can hold. And when it starts shrinking and getting to the other one, you just get out. So I get on this cross, I get in here. I hold. Of course, I'm trimming on the way up, but I can still hold until I see this. When I see the trim here, I'm out because this is coming down. And then up, again, up, and you're out. So this is called the cloud ripster, single EMA cloud ripster. I'm using the 8 and the 21 EMAs here. But we talk about this one later on. XLE, Lloyd, of course. Here we go. XLE. Let's see what energy is doing. Oh, look at that. I hope you traded this today. It was a beauty. Look at that. Wow. Look at this entry today. Break up and hold until here. And then more. Wow. I miss trading XLE and XLF. I used to trade them a lot. It was a beauty. Very nice. Very, very nice. But then you can use these indicators. Let's see how this looks with the Bollinger Band. Look how this went up, not even touched it, all the way up, and just surfing the upper one. So if it's not getting close to my middle one at all, I don't even need to get there. Look, up, all the way up, and until here. But the middle one is right here. It's away completely. That's crazy. Up and until up, and then here I would have gone out here. What a nice trade. Congrats. Beautiful. This is TOS. This is TOS. EMA 9 and 21, it's best even for hourly and daily chart. Yeah. This is a TOS, guys. Next 7 down and all up. No, the weekly little reverse in the markets. Yes. Yeah, the max 7s are down. XOM gave a nice pump today for holders. It was a beautiful pump here. But you see, even though this entry was a little bit far away from our entry here in the back, but it was a beautiful trade today. All the way here. I got out here and it went a little bit higher. So, and it might be probably if it breaks 114.82 tomorrow, I might look for another entry. But you see, we're here. The normal should be that we touch this and then we try to go back to the 112. So that's another play that I will be looking for. XOM, rejection of 114.82 because it's a rejection, and then hold of 112. All right, guys. Thank you very much for giving me company, talking about indicators. I hope that that you enjoy and that you understood, and this picks up your curiosity for using indicators a little more. And as I said, please feel free to let me know if you have any questions. If you have any doubts, just don't doubt, just write me. I love to talk about all of this. So just let me know, and we keep on learning and trying to be green the whole week. All right, guys? Let's see, Kyle. I saw the alert and studied the chart. Wasn't a good entry. Luckily, it made me study and got a great entry. Just made a Mana will be in the money now. Oh yeah, yeah. Armando, good to see you here, guy. Thank you for the company. I hope that you're using any of these EMAs. So have a great night, guys, and see you tomorrow. Take care.